Good morning. It's me, Kenny Polcari, your host of the party. It is Monday, August 23rd. And here is today's market commentary. So what happened? What happened last week? What's on the calendar for this week? And what are the concerns? Now, we know last week was a little bit of a volatile week, right? A little bit of black and blue for some investors and some traders, as we had, conflicting data coming out of the Fed on Monday and then again on Wednesday when the FOMC minutes came out, and then all kinds of speculation around what that really meant and what were the Fed members saying inside and behind the wall, and then what was the Delta variant doing, and then what was happening in Afghanistan to create even more chaos to an already kind of anxious market. One way or the other, markets ended Friday on an uptick, right? I mean, they ended the week lower, but yet on Friday, they ended on an uptick. European markets and Asian markets had gotten slammed during the week as well. Did not end the week as strongly as the U.S. did, but they're making up for that today. So what do we need to know, right? So stocks did end the week a bit black and blue last week, but today markets are in the green around the world. The focus is on the now virtual Jackson Hole Summit, right? Some of the members now suggesting that the Delta virus may cause them to hold off on suggesting an earlier push. The dollar is strengthening, putting pressure on commodities. Oil getting hit the hardest by that story, and the demand destruction story, both of which I believe are a little bit overdone, but we'll talk about that in a minute. Bitcoin surging up and through 50,000, rising 3.7% overnight. Ethereum following suit, rising 5.6% to about 3,300. And so what are we having for dinner tonight? We're going to try the spaghetti with a sweet roasted red pepper sauce, which is simple to make, but yet so good. So stocks rallied nicely on Friday. The Dow rose 225 points, or 0.6%. The S&P up 36 points, 0.8%. The NASDAQ rallied 171 points, or 1.2%, while the Russell added 36 points and 1.6%. The trend was followed behind, rising only 35 points. All while the week ended a bit lower, though, right? The day was up, the week was down. Investors survived that week that featured the release of the July Fed minutes with just a little bit of black and blue. Yet the bigger punch could come this week when the Jackson Hole, Kansas City Fed boondoggle, which begins on Thursday and ends on Saturday. And while the boondoggle is now being held virtually, the result, will it be the same or not? Is it going to be the same when they present over Zoom versus live and in person? Well, we're going to find out. Fed Chair Jay Powell is going to be on this Zoom camera now, delivering his State of the Economy speech, where it is expected that he will reveal just a bit more about the intentions of the Fed and for monetary policy going forward. And while we all learned last week, like I said, that the desire of the majority of the members of the Federal Open Market Committee want to pull the trigger and begin the process of pulling back on stimulation, the question remains, when exactly is that? Some want September, October, others want November, December. So when is it? There have been a range of ideas within the walls of the Fed, and investors are waiting patiently for the outcome. And Jay's been very coy about acknowledging that while we are approaching the time to taper, he is not committing with any specificity about when that may happen. Is it September, October? Is it November, December? Well, that depends on what the Fed thinks about the damage that the Delta variant might inflict on the U.S. economy in the next couple of months. And that has managed to keep the markets teetering on the edge, right? With investors wanting to be all in on the one hand, but yet they want to be close to the door on the other hand, just in case they hear something they don't want. They want to be able to run out the door if someone yells fire, right? Now, I'm still thinking it's a November, December event, right? I do not believe it's going to be September, October. But there are some that continue to push for the September, October event, which I think would send stocks tumbling. Why? Not because we don't expect the tapering. We do. But September, October is earlier than the markets and investors have been modeling for. In addition, as discussed, it is a seasonally weak time of year. So creating a change in monetary policy right now may not be the best decision. But hey, what do I know? I guess you could always argue that this has been on the table for months, and so either way, it shouldn't be a surprise whether they start in September, October, or November, December. In the end, that's exactly what the Fed is hoping for. No surprises, so they keep talking and talking and talking. There are so many other things that we could toss into this basket besides a taper conversation that the Fed has to deal with. There's this disaster in Afghanistan, and while that event does not price stocks in the long run, it can, or will that have an economic impact on our economy? It will most likely cause the $1 trillion and the $3.5 trillion stimulus packages that are down in DC right now to run into some headwinds, and that will have an impact on the economic models that many investment managers have been using. Because without the massive spend, then all the programs that the Dems want are now called into question, and analysts will have to remodel company earnings projections, economic growth projections, etc., to reflect the possibility that maybe these stimulus packages don't go through. In addition, we've seen some of the latest economic data begin to show just some signs of stress. Housing starts and retail sales are just the latest, while the Delta variant continues to wreak havoc around the globe. Yet, on the other hand, inflation concerns continue to rise. The latest PPI and CPI reports suggesting that it is more than just transitory. Yet the 10-year Treasury remains well below the February-March highs of 1.8%, suggesting just the opposite. So confusion reigns supreme. Then we've seen industrial production improving. That's a positive. Initial jobless claims, continuing claims, and unemployment are all falling. That's a positive. So you see, it's not all so black and white, right? And thus, we have these varied calls to action, these confused calls to action. Some are seeing it more bullish, others are seeing it still a little bit bearish. And those varied calls are exactly what the investors are watching, right? Because they're trying to gain the upper hand. And to that, I'd say slow down. There is chaos. There is opportunity in chaos. Or in chaos, there is opportunity. Don't just assume that it's going to all be bad. And while it might feel uncomfortable for a little bit, the ship will right itself once we get more clarity. So you have to have a strong stomach. You have to understand what's ahead of us. By 4 p.m. on Friday, the 10-year Treasury was yielding 1.25%. The VIX, which had rallied during the week, settled back down $3 or down 14%, ending the day at 1856. The dollar index continued to advance, ending the day at 93.48. Think that's a demand play, right? A safe haven play. And this continues to put pressure on the commodity index, right? Commodity complex. Rising dollars means falling commodity prices. Gold has fallen marginally while oil continues to get beaten up, falling another 2.5% to end the day down at $62 a barrel, leaving it just $3 from its 200-day trend line moving average support. And if anybody thinks that OPEC's going to increase production at a time when oil prices are falling, think again. Increased production will only put more supply into an already weak market, setting prices potentially lower. So don't hold your breath. Now, you know how I feel about it. I think the whole demand destruction story is way overdone. But a strengthening dollar will put pressure on commodities, right? We're approaching that inflection point now. And that's, like I said, is the key trend line support. And the trend line support level is $59.28 a barrel. So for now, I'm watching it. Oil has down 15% since August 1st, mostly due to those concerns surrounding the Delta variant and what it might mean for demand. They're acting as if the world is about to shut down again. I do not believe it is. We know that we can go remote for many of the things we need, and we're already seeing companies push back on the return to work. So people are starting to continue to work remote, but that doesn't mean demand is going anywhere. And for the things that we can't do remotely, we take precautions, right? It's not rocket science. It is what it is. And this morning, oil is up 3.6%, trading at $64 a barrel. Also this morning, U.S. futures are rallying. The Dow's up 145 points. The S&P's up 13 points. The Nasdaq adding 40 points. The Russell's ahead by 16 points. The chatter this morning is that the Fed will be more dovish at Jackson Hole because they are more concerned about the Delta variant as well as what the crisis in Afghanistan might mean for Biden's economic plans and his agenda. So it's okay to go slower, according to the Fed, but we're going to find out. Dip buying continues to suggest that investors are betting that Jay will not change policy just yet in a lower for longer narrative, but that he's going to reiterate that could change in the months ahead if the economics demand it. Look, he's already told us that the Fed is nearing an agreement to announce a change in policy, so we know it's coming. So there should be no surprise at all. This morning's action is suggesting that move will be later versus sooner. Thus, markets are rallying, global markets are rallying, U.S. futures are rallying. Economic data today includes the Chicago Fed, Market U.S. manufacturing PMI of 62.3. Services PMI of 59.2. Existing home sales of down 0.5%. The key metric, though, today are going to be both those PMIs, right? Current expectations suggest strength. Recall that 50 is a neutral line. Anything north of 50 is bullish. Anything south of 50 is bearish. And now both of these numbers are well north of 50. Later in the week, look for new home sales, durable goods, capital goods orders, and capital goods shipped. On Thursday, we're going to get the second read on second quarter GDP, and the expectation is for that number to be 6.7% versus last month's call of 6.5%. So it's actually increasing. That would be positive, right? And that does make some sense based on a lot of the other macro data that we're seeing. Global markets are all surging today. Asian markets ended the day much higher. Hong Kong, which was in bear market territory as of last week, is no longer. Hong Kong rallied 1% overnight, leaving that market only down 19%, which is less than the bear market territory. Investors are going bargain hunting after the heavy losses suffered over the past couple of weeks due to heightened regulatory uncertainty coming out of China, leaving many of the tech names in that part of the world aching for buyers. Japan ended the day up 1.8%, China up 1.4%, Taiwan up 2.5%, South Korea up 1%, while Australia ended the day up 0.4%. European markets are also higher this morning. Traders in Europe taking advantage of the recent weakness, as well as betting that the Fed is not going to announce a taper sooner than expected. IHS Market Flash Composite PMI for the Eurozone fell just a bit to 59.5 versus last month's 60.2. Not the end of the world. And at 6 o'clock this morning, all European markets are ahead by about 0.5%, 0.8%. And the excitement is back in the crypto space. Bitcoin is trading at 50,300. Ethereum is trading at 3,300. So that's igniting a lot of excitement amongst the millennial set. The S&P ended the day on Friday at 44.41. It tested as low as 44.06 and as high as 44.44. The mood at the end of the day was much more upbeat than it had been, and what appears to be another buy the dip rally. Look, investors are trying to price it all in. The risk of waiting until Thursday versus the risk of not waiting until Thursday to get a clearer picture of what the Fed has in store is always the issue, right? They're weighing growth risk, they're weighing Delta variant risk, and they're weighing infrastructure risk, the talks that are taking place in D.C., right? Be careful, don't get drawn in yet, right? Don't let your guard down. We are at the end of August, where volumes tend to dry up a bit, leaving moves in the market exacerbated more than normal. And then we're coming into the September-October period, which is also full of seasonal volatility. Now, that doesn't mean panic at all. It just means keep your head clear. In the coming volatility, you're going to find opportunity, right? It's going to give you an opportunity to add to current positions or initiate new ones. Buying some downside protection is never a bad idea, especially at this time of year. So talk to your advisor about it, or talk to other traders about it, or investors about it. How are they protecting themselves? And if you've been paying attention to the Michael Burry trade, essentially his bet is that Treasury prices will collapse, sending Treasury yields surging faster than the Fed expects. And if that happens, you can expect stocks to get slammed. Now look, he's an avid methodical investor, but his trade is short-term oriented. So if Treasuries collapse and yields rise, he wins. And maybe we're going to get an indication of that later this week, right? So just be prepared. That's part of the volatility I'm talking about. Remember, you can text the word invest to 21,000 to get my digital business card. Feel free to download it right into your phone. It goes right into your contacts. You can send me off an email, a text message, give me a call. I'm always happy to engage, talk about markets, talk about planning, thoughts, concerns, ideas, whatever. You can follow me on Twitter as well, at Kenny Polcari is my Twitter handle, or on Instagram, KennyP1961 is my Instagram handle as well, right? So what are we having for dinner tonight? So we're having this really great dish. It takes you as long as it takes to boil the pasta. So if you're kind of in a rush, this dish is not going to take you much longer than 15 minutes, right? By the time you get it all together. So it's a spaghetti, or you could use any long pasta for this. So linguine, spaghetti, angela, bucatini, whatever you want. In a roasted sweet red pepper sauce, right? So you start by taking a pot of salted water, bring it to a rolling boil, put it on the back burner, bring it to a rolling boil. While that's happening, you're going to need spaghetti, you need a diced onion, you need chopped garlic, you need olive oil, you need roasted sweet peppers, tomato paste, chicken broth, salt and pepper, and fresh basil. So while the water's boiling on the back burner, in a big saute pan, you want to add olive oil 2 or 3 times around, add the onions, saute until soft, 5 to 8 minutes. Add the garlic, don't let it burn, just enough to saute it. Now, take the onions and the garlic and put it in a food processor. Add a cup of chicken broth, add a can of tomato paste, and add the sweet roasted red peppers. Pulse it, blend it, season it with salt and pepper, taste it, make sure that it's seasoned correctly, adjust if you need to, then put it back into the big saute pan and put it on medium-low just to bring it to a warm temperature, right? Because you want the sauce to be warm. Now, once the pasta is complete, take it out with tongs, take it out of the water, let it drain a little bit, add it right to the big saute pan that's got the sweet red pepper sauce. Mix it well. If it starts to dry up, if the pasta soaks up the sauce, you know what you can do? You can add a little bit of the pasta water. You want to keep it moist. You don't want to make it soupy. When you're serving this, here's the key. This doesn't take Parmigiana cheese. This takes goat cheese. It's very, very interesting. So you want to take some warm bowls. Take take the pasta, put it in the bowl, and now you want to top it with goat cheese. So take the goat cheese, you can crumple it on top, and then serve it that way. Let your guests mix it up. It's really, really good, and it's different, right? You're not using Parmigiana, but now you're using a softened goat cheese because as you mix that with the warm pasta, it kind of melts and it blends in with the sauce. So it's going to be different than a sauce you've ever had, but it's very good. You're never going to be disappointed. You can drink this with a nice dry white wine. You can drink it with a rosé. Again, I wouldn't drink it with a red wine necessarily because it's not like a heavy dish. I would drink it with something a little bit lighter. But you know me, I prefer the whites anyway, unless I'm having a steak or a veal chop. So I'd go with the Pinot Grigio Santa Margherita. But again, it's your choice. In any event, it is Monday morning. The day is about to get started. So buckle up and get ready and take good care. And until tomorrow, I'll see you then.